My friends, a lot of action happening in the markets. Let's look at Shiba. Okay, here it is. What I have for you guys on Shiba is we're looking at the buy zone. You guys all saw my special report. I hope you guys saw my special report on Shiba. This is the buy zone. I can see that the professional money, and I put you guys had this number, by the way, for months. If you guys don't remember, pull up my old charts. You guys have that number for months, and that number is based on our Tiger calculation, okay? Once we had our mixed Tiger, we were able to duplicate it at this point right here, all right? And it's primarily on the weekly chart at this exact angle, right there. We stopped right exactly at this price point, 0.00082, and therefore the curvature is in these areas, okay? Just a little bit higher. Duplicate. Did I move it too low? Yeah, I did. There we go. All right. This is primarily the zone. We're looking for prices to give us another behavior. And what I can see, what you guys remember I saw is I can see that we had pushing volume, ultra high pushing volume. Oh, by the way, we don't have our average on our volume. So where's our average? What we can do, click on your volume. You can double click, it's going to pop up the menu, or it's going to show your little toolbar and go to your little settings, which is that hexagonal icon. I'm going to click on it. Now, see this one versus volume M8? We need to turn that on. That's our moving average, but it's blue. I don't like that color on this background. It's harder to see. We're going to change it to white. All right, and then I'll make sure it's, they'll pass these up. You can make it a medium thickness. And now you guys can see that when we look at volume, there's a little white line that gives us the average where that volume is, okay? So we can tell what's ultra high and what's ultra low volume. All right. And what we can see, as I gave you guys in my report, we had ultra high volume that was pushing, and then finally on the next bar, that was a down bar, we have a big shakeout in this area, and that's when you see high wicks on the top and bottom. Usually that's a continuation. A shakeout is usually a continuation pattern. It's to throw people off on both sides, and professional money who is in a strong position, maybe they can withstand the buys because they bought way down here or maybe at lower prices. They can withstand those wicks, but the person who's just the average retail trader, they're just buying, right? They just buy a little bit. They may have bought on leverage. They put their stop just at these prices right here, and it stops them out. And they say thank you, and they take it up. Also, people who had a higher profit, they shake them out, and now they're taking all their supply. It's a money-making maneuver called a shakeout. And usually, when you see shakeouts after a period when price was going clearly in one direction, the shakeout will happen, and then price will resume going in that direction. That is not something I included in my report. But what I can tell you in this report, or in that report, is that we talked about that we went down the next two bars on low volume, on down bars, on very low volume. And this tells us that there's no demand that appeared on March 7th. Okay? And when we see that, that's a very strong indication that the markup is going to continue. All right, now that we come back to these areas, we go down once, we go down twice. Look at the volume. It's even lower than when we gave our report. There is no demand in these areas in an area of health. They pushed it just to get to this point so that they are not swamped by all the sellers who were supposed to take their profits at these zones underneath these areas. And now that we're in the health, now they can rest. That's where the rest happens. And this is a very big clue, because now when there's no demand, the markup is allowed to continue. They have to drain up all the supplies, all the buyers, anyone who's willing to take profit, anyone who's about to get out of Shiba. This is where they want to do the move. And it's all very interesting that Bitcoin had its very strong pump in the last few days, or even up to this morning. It's at 72,000, something like that. And Shiba really hasn't done a lot. Now, what does this tell me? This is a big clue that Shiba has been decoupled, or is decoupling from Bitcoin. Okay. Now, when this shakeout happened, you guys also notice a few cryptos had a shakeout as well. But Shiba, what did it do? It shook out, and it didn't lose its position even on top here. This is a very big, interesting thing, because we heard prophetically that Shiba is supposed to go up during the time when Bitcoin would go down. And I know Bitcoin should have a chance that it's another run, and it may be over the next few days, and it could be very quick. The move from people's dreams and visions that they had about Bitcoin hitting a very high number, it happened very quick. And as soon as it went up, that's when it went down. It was almost back to back, and people barely had time to sell at those areas. And that was according to the dreams. Now, if that happens, that's the USDT.D hitting that 3.14 number. I believe that's going to be the next move. And when this happens, it's very possible you're going to need to take profits on many cryptos. And that's when we probably will get to October prices for cryptos. But if we look at this, is very interesting, because if Bitcoin falls and Bitcoin's rising, and Shiba's really barely doing anything except for accumulation is happening, or smaller, I should say, the supply is being dried up, which is a very bullish signal. That the next time it rises, it's going to seem like it rises out of the blue. And that's because the supply is draining up in this area. And that's why it's going to look like it pops up out of nowhere. See, markets don't just go up out of nowhere. They actually go up over time based on all the structures, price moving into health, certain activities happening in the market. Then when price moves up, people are like, it moved up all the way by itself. No, it didn't move up really overnight. It happened over a short time. So relatively soon is what I said should happen. Look at the ultra low volume. So let's mark this and keep this for your record. No demand, number one. And here we go down again. No demand, number two. Let's put a text. This is a bullish signal. This is a bullish signal that Shiba's supply is being drained. Price should move up relatively soon because the markup should continue. There a lack of sellers at this point. Okay, so this is what I'm really expecting, and today it's even stronger. Okay, that's not how you spell relative. Okay, I'm sure my family members would be angry that I didn't know how to spell that. And if you don't get that joke, don't worry, there'll be more jokes. Okay, all right, so everybody understand what's happening with the volume. The supply is being drained up. Now, here's what I'm going to teach you. I'm going to teach you something new, but I want to ask, did everybody get that concept right now? Before we move on to the next concept, because we're going to go into timing now. Timing. Would you dare risk Shiba before expected market drop? Would I dare risk? What's a dare risk?
I think it means de-risk.
Oh, de-risk before the expected market would. What does that mean? What do you mean by that?
Take profit.
I wouldn't take profit right now. Oh, before the market drop? Because of the strong position of Shiba and because of the decoupling, and I've been really playing this close to the chest. I'm really watching the relationship between Bitcoin USDT.D, but I'm also watching the relationship between Shiba in these days. I would expect at the most a shakeout, and I would not be in a leveraged position Shiba. I would not be in a leveraged position Shiba. Number one, if I was going to be in a leveraged position Shiba, which I was in a leveraged position Shiba, I want to be in the leveraged position down here when the health first came in by breaking over the watch line, which we're going to talk over in just a sec. Once we were in this zone right here, that's when I wanted to take the biggest buy. I also wanted to be in here, which I was in here. That's when I first started accumulating Shiba. But even then was risky because guess what? If you're in a heavy leverage position, look how far price spiked down before coming back to normal. My son's having too much fun. See, price spiked all the way down here and came up, and it didn't affect the analysis at all. It was still round action on top of a larger parabolic that was built over several years. You guys get that? So it's possible that price can spike down into these zones and still come up here and be healthy right at the 0.0029. Does that make sense to everybody? But if you're in a leveraged position, it can throw you out your leverage position. You'll be spiked down. So this is why there's some danger in taking leverage positions, and the market shakeout is going to take out those who are greedy. Oh, did I call you guys greedy? You gotta use careful. You gotta be careful. Why do we need to be in a leverage position right now? And if you have a good reason to, you can. But right now there's significant danger with the whole USDT.D situation. You're in the spike zone. For number one, you heard prophecies. You're gonna move up and down. If you're in leverage positions and you're only in leverage position on Shiba, your margin cannot handle it if it takes a big spike. It's a game. If you have a leverage position, they can take you out of the game. If you just own the spot right out, they can't hurt you. If you're only in futures market, you can get taken out of the game. If you're only in Shiba 3S, you can get taken out of the game. I took profits on one of my Shiba positions on my leverage. Then I was in another leverage position later on, and I got shaken out because I over leveraged, and it took out some of my money. It took hundreds of dollars away from me, because I was shaken out in that shakeout. And that can happen. But luckily I have 3 other exchanges where I had some positions here and here. I have it spread out just in case. Now luckily that position still is back up again, but this is how quick they can take you out. So I want to let you guys know from experience, if you're only playing leverage, be careful. By the way, everything in this video is not financial, investment, or trading advice of any kind. Everything is just for entertainment, educational, and comedic purposes only. Bear in mind that I ate red Nespressos for breakfast, and so should you. Trading in the markets carries substantial risk. Never trade more than you can afford to lose, and especially be aware against high leverage positions or even leverage positions. And this is never nutritional or medical advice of any kind. Past performance is never indicative of future performance. All right, let's get back to it. And look, Triple J said, the Lord said roller coaster. Yeah, it's true. Roller coaster.
Roller coaster.
Say what? Roller coaster. I'm just kidding. That was part of a song. Somebody got laughed. Who laughed?
Rolling roller coaster.
Rolling roller coaster. Yes. So if we see Shiba spikes in here, I'm gonna look for actually those spikes to be good prices to get back into Shiba. Okay, I want it to be a long so I can accumulate more. That'd be great. But if it moves up quick, that's going to be quick. Now, how long are we talking until Shiba moves? Does anybody know how to calculate how long Shiba has? And I'm so grateful you guys are in this class today. Okay, Maria Conwell said roller coaster 2 months ago. Yeah. Does anybody know how to calculate timing? When should Shiba move up? Anybody have a guess on what we can do to mitigate that? Hours? Hours. This is Reina. Anyone from a chart perspective, if you guys are in a trade and it looks similar, you're on top of an important area, whether it's Tiger or whatever major support.
How's Argentina?
I guess you could draw like a line, make a triangle, make a flag, sort of.
Yes. If Ian was here, I'd slap him and be like, "Good job, Ian." I didn't say on the face, on the back, on like a patting on the back, guys.
With a golden
Well, look and see how they love you, Ian. No. Oh, that melon. No, not on the butt. No. And we're not in football. There is. So, can we draw the triangle right here? Yes or no? And what do we call that triangle, by the way? That triangle is called a watch line. Okay. It looks something like this. We know that when price comes into a bigger point of health on the larger story, we can now zoom in these territories. Okay, we can zoom in the health territory. So once I know there's health, I can now draw the watch line in that territory and I can know timing better. In this case, we would draw the watch line. It looks like that triangle pattern. And I know that price can play all the way up until where these 2 points meet. The support line plus the watch line. They meet together right here. Approximately in February 9th of 2024. So I know with a more higher degree of certainty that price can play and waste my time at a maximum of February 24th. It has to pace through the line, whether down below or sideways. And if it goes sideways, that's always health, okay, because we're still in the healthy territory. Okay, and here's the other one, the tiger and the parabolic. Now, once we moved into that healthy territory, I just take a look at where these lines intersect, and I can watch the time. And the time down on the bottom, it says, again, February 9th, February 11th, February 9th, 10th, 11th. Somewhere around there, that's when I can expect price has a chance to start moving up. And lo and behold, price started moving up in those days. Okay? So does it take a rocket scientist? Do you guys have to have a PhD? It helps if you want to have a PhD and get a job. But if you're just reading the markets, no, it doesn't help. You guys don't have to be a rocket scientist.
Good.
Good wins, because I'm not. Good, that's pretty good. Because I failed the rocket science. My rocket. What we're looking at, okay, let's move that one to the side. We don't need that. Is we're going to draw a watch line. My question to you again is, can we draw the watch line here? Yes or no? See or no? You guys tell me. Someone said C.
Dale.
Someone said Dale. I would say you can, but you're only dealing with a few candles, and therefore it can be dangerous for you. Okay, that's what I'm going to say. I have spoken. You can draw this triangle, and you can do good. I would say let's look to see, zoom in to see if we can see more. Let's go down to the 12 and 6. I've already done this, so I understand that we need to be primarily looking at the 6-hour chart, and we can see something else. All right. Now, if I'm using the 6-hour chart, does the candles make more sense for us to draw a watch line? Yes or no? Yeah? Don't these candles look a little bit better? Yeah, there it goes. Nessa says yeah.
Are you almost on your break right?
Almost. Now, does any of these lines encompass? Yeah.
I got a question, because here we see those same wicks.
Mm-hmm.
They're not completed either. Or is it just a picture?
Let's look at the structure. Let's look at the picture. The structure. We have the same wicks, right? But do we see any of these structures that have round action that would tell us that this is more organic and something we can draw? Yeah?
Yeah, the round action.
All right, draw it on our screen where the round action is. And what is the other part called? Okay, after you draw the round action, somebody draw it on their screen and draw our watch line, which is going to be a type of angle, like just basically a key angle, but we're watching it because it's more short term. Okay, no, that's not the one I'm actually looking for. There's another one.
Sorry.
There's another one. Good try, good try.
There we go. Crap.
Anyone else? Use the round action as a fulcrum. There you go. Good job, Carol.
Comes down and then shoots up.
Okay, where do we connect it to, Carol? We got 1 point. That's good. That's the round action I'm looking for. So if you guys can't see, Carol drew this. Okay, and there it is. There's our peak. All right, so here's our core. Here's our round action. Now, anybody want to draw the angle that you need to watch? Somebody draw it. You guys are doing good. I'm proud of you. You're going to be fine. Close. It's not a flat.
Does it go from the top left?
There it is.
Right?
Yeah, it's going to go from that top left at the core down there. Good job, Carol. Good job, Wayne. It is this angle. Something like that. Okay. There you go. Good job. I'm going to clear your annotations now. Fantastic. You guys are good detectives. Here we go. So we can now draw this angle from there to there, and we're going to try to see if we have verification, but let's now draw it with professionally. We're going to take a trend line. We're going to go to the cores here, and we're going to leave it that white dotted. I'm going to try to draw it to the peak of this area. I'm trying not to go through those candles, but right on top of there. All right, and we're going to stretch it out. Now, is there verification that we did this correctly? Yes or no?
Yes.
Yeah.
Yeah. There's a white candle in the middle.
That's right. It's right there. See that? Right there. That's going to be proof that you did it right. That was when. This is a 6-hour chart. I did this, by the way, I did this personally last night on my phone, and I deleted it for the purpose of doing a tutorial today when I would cover Shiba. The price is 00034, 4034, last night, Sunday, March 10th, 11 p.m. Okay, when price came up to this point right there, I knew something was wrong. I'm sorry, not something was wrong. I knew this should be the resistance. And if we got the close above that area, like this, if the candle looked like this at the end of it all, let me see, turn white. Okay, if the candle looked like this, would that have been a first sign of health? Yes or no?
Yes.
Yes. And if the candle, that's right. And if the candle looks just like it did right here, where it stops exactly on the line or very close to the line, what does that mean?
Resistance.
Yeah, it means it's resistance. It's clue that the foundational areas, meaning your source point and your secondary point, it means basically it's not ready to go up yet. So this candle being a down bar right here, is that correct or wrong? It's correct, right? It means price can play in here.
Yes.
And that's fine. It can even play in here. Oh, sorry, not in that. I drew this angle. This is up. See this right here? That's not a trend line. That's just a price label. Okay. The primary angle, therefore, is somewhere here. Let me see if I can draw it in yellow. Is down here to there. So can we calculate time now? The maximum time that price can play? Yes. The answer is yes. Good job, Wayne. Good job. We can calculate distance. How do we do it now? How do we calculate that distance? Somebody tell me again. I'm a newbie. I don't know.
Where that point is on the triangle to the right coming down and then flat coming across to that very point is it's got to make a decision.
Yep. So let's take a look. Good job. Good job. Everybody who's circling that. We take a look at what price that is, or where they intersect, and this is how you know timing. What's the time? Sunday, March 17th, 2024 at 11 p.m. Okay? Does that make sense? I hope this helps somebody. You guys now know. Go ahead. Your question?
Yes. So are we expecting for at some point fall to 29 again?
Not necessarily, but it can,
Doesn't it?
and you're still fine.
Doesn't it just need to make a decision at the latest by then?
Correct. Correct. It just needs to make a decision. It can even fall below that 29, like it did before on the next day after this was March 5th, during the Bitcoin move down to 60, from 69,000 all the way to 60,000, and that's what happened to Shiba. It shook out, came right back to where it was. If Bitcoin goes down, it's very possible we're going to get shaken out again, and it's going to come right back to where it was. Okay.
Well, expect Bitcoin.
Good. Which means Shiba may have a stronger chance to get into this healthier territory. This is a 6-hour chart, and this is something that we can expect. So you can read it something like this. I'm going to give it to you here, and then we'll move on. Okay, we'll go to our next. We'll take a session break, and we'll move on. So if I go here, phase through, whether it's now or all the way on March 17th, I have a chance now to go into this healthy territory and now move up. Am I going to move up now? No, I'm not going to move up now until I clear this resistance. I need to be in this area, the healthy side of it, before I move up. Now, am I on the healthy side on the larger story? Again, yes or no? Am I on the healthy side on the larger story?
Yes.
No. Yes.
No.
Yes, I am. I'm on the healthy side on the larger side. Sorry. By virtue of being on top of that tiger line, being on the top of the parabolic, all of that's the larger story we covered in many other videos. Am I on the healthy side on the smaller time frame, the 6-hour chart?
Not yet.
That's right. That's correct. Correct. You guys are good. Okay, so let's put this on our chart so people can see it. We're going to type this up. We're going to say Shiba. We can see that Shiba is on the healthy side on the larger time frames, the larger story. However, on the smaller 6-hour charts, Shiba is not yet ready. Price can play around in this triangle up until March 17th, 2024. After that, it must make a decision up or down. We can see due to the volume, there is no demand. This is a very bullish signal that the price will break to the top side and go higher. All right, so you can see from all the data when we put the story together that the likelihood of us breaking to the top is very high, okay, due to the volume, and now you know timing due to the watch line. All right, do I have any other questions before we take a break for our session? We're going to take a break, about a 15-minute break, and then we're going to come back for our second session. I'll try to cover some of these other cryptos, followed by our tutorial of shorting, okay? I did take time to do tutorials, and I know normally we do tutorials on Wednesday, but we did not do tutorials last week or the week before, so I do apologize. I want to make sure that you guys are all know that I'm not just a teacher who's going really fast. It's not enough for me to catch a fish and give you a fish. I have to teach you how to fish, because if I give you a fish, you eat for a day. If I teach you how to fish, you eat for a lifetime, right? You don't need gurus. You don't need internet gurus. Sometimes it's just you and the data, and you praying, and you'll be more clear. You don't need watch a lot of YouTube videos. If you know how to read and draw the energy on your own charts, it's gonna greatly put you in the right direction many times, okay?
Quick question.
Yep.
On that Shiba chart there, you had that red horizontal line at like 29. Was that a shortcut?
No.
What is that red line there?
That is just a highlighter that said this is important. What it is actually the Tiger calculation.
All right, Tiger. Okay.
Yeah. So that's a mixed Tiger calculation line.
It's a strong line then.
Yes. Yes. Very strong.
Tiger. Okay.
Yeah. If price doesn't respond to it on the bottom side, I look for it to respond on the top side. Anyone else? Any other questions? Yes. Let's go. Hey, NASA.
Hey, I was just wondering, would you agree that descending triangles would usually indicate a squeeze and then a move up, and ascending triangles would usually indicate a squeeze and then a move down? Or does it not?
I have seen that. It's an indication of one way or the other, but primarily I'm reading the context, the story in context, because I've seen descending triangles where price breaks to the downside. And primarily some of the biggest clues is what price was doing before it did the triangle. For example, if we come down in a downtrend and then we go up and do that descending triangle, most of the time we're going to break to the bottom side. In this case, because we are in the uptrend, see, we went up and then the descending triangle is here, it's very possible we're going to break. For me, I like to just wait for the break. But because now we can trade using volume and read the VSA, we have a higher degree of certainty which side we're going to break to the top or bottom, because we can actually see what the professionals are doing within that descending triangle. So that's more important than just knowing a chart pattern. And that's primarily why I stay away so much from chart patterns. And I like chart patterns. I traded with them for many years. I've been trading since I was and reading charts since I was 18. But I did it 11 years unsuccessfully. 11 years unsuccessfully. Around in my 20s and 30s, we did it. I basically started living off of my chart, so I wasn't able to accumulate any mass wealth, but I was able to at least trade and make some decent income, at least to support me when I needed. I hope that in my experience, I've just seen that there's a lot of times patterns work and patterns don't work. But then I realized that's what led me to sword method, to find the truth. What price does or doesn't do at certain lines is very important.
Thank you.
And good
Appreciate
morning.
your reply.
Anyone else?
Yeah, you said there's no demand. Is that's not a good thing, right? If there's no demand.
No. In the world of VSA, the terminology is called no demand. And in a market, it's a very good thing, because it's like the housing market. If you have it's like saying no sellers, but no demand could look. The reason it's not no demand, it's because the volume could have no demand on the top side and it can be bearish. It can have no demand on the bottom side and be bullish. In this case, we read the no demand bars in context. We can see that there was already the pushing already the accumulation happened. So now there's no demand. No demand in this case means the sellers have dried up. Nobody's selling. And when nobody sells any homes, after a time when the markets are going up and nobody's selling at those prices, what happens to the markets? According to the laws of supply and demand, markets go up, and that's the markup will continue. When we do Sword Method 6.0, my friends, when I do Sword Method 6.0, I did commit to doing heavy volume tutorials. So we're going to focus a lot on those volume tutorials. And when I do, we're going to give you tons of examples of markets going up on no demand in context, meaning there's been already accumulation that happened, and you'll see it over and over again, and then the light bulbs will click for many of you guys. But yes, it is a very good thing in a rising market to have no demand. Phil says, I have to go to work, but if you get Floki, then I think the Gate.io chart on TradingView has the most data over 2 years. I'll watch it later. Okay. Gate.io. Alright, I put Gate.io in the notes there, so I know to look at Floki. Let's take a look at a few things. I have something important to show you guys. All right, you guys remember from my first report on USDT.D. So we're going to pull up our USDT.D chart. All right, you guys seen this one. And if you guys haven't watched it, this is my primary market outlook. All right, I did something on YouTube. I released a report not so long ago revealing that the major area where I believe resistance would happen, and that's going to be 4.96 to 4.61. And I don't think we're going to get past this area unscathed without some kind of importance now, or without some sort of very interesting things. We calculated the spikes, which is basically the distance on how high we can go on the opposite side before reversing. But something very interesting has been happening. When we came down to this area, in the spike distance, we immediately came back up right away into those areas on the underside of the spike, and then we came down. Now, I want to look carefully at the evidence because I said something very important. If the evidence is wrong and we do not reverse at this area right here, that's very telling. This area is going to activate one way or another. It's going to be on the other side, or it's going to be right there somewhere in the middle or on the top up to this area. But if we are able to pierce through that resistance, that's very telling that they're trying to do something. And this is the other number I gave you a couple weeks ago when I did that. Number is going to be 3.14 2.80. Now we can calculate that the move just from that little spike here and here is about $10,000 on Bitcoin. That moved from 60 to 70. If we take that distance and we can say, hey, 60 to 70 is right here, then we can know that's going to be about 70 to 80,000. And then from here, that's going to be 80 to 90,000. Here, 90 to around 100,000. 100,000 to 110. And that's just keeping the proportions, not realizing that this could actually be around $120,000 when we hit this number of 3.14. If they're trying to push past this area, or if price is able to get past this area, it's super critical. And it can all happen within a single month of March. And I think what's going to happen is that we need to read the evidence. And we read the evidence the other day in Dive. If you guys know, we've read this in Dive. And we can calculate that the angle that we were looking is this angle right here. All right, that's going to be our key angle. We labeled that key angle, okay? When we took that angle and we duplicated that angle on the bottom side underneath the energy center, and it's real easy. It's just energy center 1, energy center 2, and energy center number 3. So we can have 1, 2, 3, all right? And when we put that angle under there, we can actually see what's really happening. And what's really happening is that the resistance and support along this path should have been here. Okay, remember, when this chart goes up, Bitcoin goes down. When this chart goes down, Bitcoin primarily goes up. So we want this chart to go up because that usually helps influence the rest of the market, okay? I'm sorry, we want this chart to go down so Bitcoin can go up, okay? Again, we want this chart to go down so that Bitcoin can go up. And something very interesting happened that we can read. And today we're going to read this in a different way. And we can see that we were supposed to reject here, but what happened? We didn't. We actually cracked to the positive side of this down move. Now, normally that would be sickness because this isn't a downtrend. And that means that when I see sickness, I think, wow, that's a type of acceleration where price is now going to go even further down. It's a very big clue as what is happening, okay? Because again, this should have been the support, and price, if it was normally going down, it should have been along that track. But now we're accelerating, And now I'm looking for price to round on the underside of that line, so that gives us more confidence. We saw that the other day, and in dive we covered this. All right, here's what happened. We broke to this side. You guys can see I highlighted it for you in that day. And the moment we come down to the spike area, we went all the way up to this price right here at 4.73. And then what happened? Before the end of the day, we stopped right there on that line. Now, was that critical? Was that important? Absolutely, it was critical. Because that line just so happens to be the underside of this area. Okay, do you guys see that? That was that key angle. This was the phantom. I'm highlighting where it's at. And so for us to go all the way up there, but yet come back down here, tells us that this line is very strong. And therefore, we can take it as price rejecting on the underside, and that's a big clue that we're going to be going down even further. Okay, and this is what I talked about. I said, this is a very positive sign for the move to continue. Now, if we're hearing words, prophetic words like dust settling, this is basically where the dust would settle. Now, primarily what I was expecting was to move up to here on the higher charts, and it's still very possible. But at the moment, it's looking like this is the biggest continuation. If prices break above these areas, like they did, this is where we're supposed to reject. But if we do not reject at that area and we instead see evidence of pushing to the underside, then we're looking for the underside to be just as important. And that means they're going to make a mad grab and dash at it. This is what the evidence tells us. That's why in the first video I said, listen, I expect us to move up here. But if I'm wrong and we push past, then we're looking to go down to this number, 3.14. Bitcoin could very well be at 120,000 area in these days and seasons, and therefore it would be only just one season of wealth transfer for the first part. This is where we would expect prices to reverse. This is primarily where we'd look to reverse. And so you guys know from my previous report, our private one on Dive, I said it may look like this, a mad dash up to here, but the other move it could be is then we can have that rejection. It could look like this as well. So at this moment, I'm going to now add this icon, because we would be looking to get, if we come down here without really stopping here except for just a little spike, then we're going to be ultimately be looking to still hit this number at some time in the future, and then we could see another move of possible wealth. So either the wealth transfer number 2 is going to happen here, or it's going to happen here. But those are the two primary numbers I'm still looking at. So this X will move to the left because it's still in the same area. That's where I want to buy cryptos up again. Many of you probably may be millionaires by then. Okay, it's possible. And the other area, it just comes down like this. Now, this is still the same line, and it could be very quickly. All right, this is on a daily chart. But this is still the same lines we're looking at. These are still the numbers that are in play. We just need to see what the evidence is. And I said we're going to play this very close to the chest to watch what's really happening. I believe there's a lot of things going on, but this is what I see primarily in the data. And that's the same number, so you guys don't really have any new updates. Just know that's where I believe we're going. And now let's look at the volume a little bit further before I close this part of the USDT.D. If we look at the volume, and I pull it up, then guess what we see in the last few days? Over the last week, we saw ultra high volume on the underside during that spike. If this was buying and prices were going to reverse, number one, why are we on the underside of this area before the buying? We should normally be buying towards the middle or to the hot top. That's evidence number one that it's not buying. Okay, number two, we have ultra high volume followed by down bars and even a lower close. It looks like today it's happening, or over the last few days. So if this was really buying, why is there not evidence of candles going up? No. What I believe this area is areas. If we look at it in the story, remember, the story is that there's support or a roof right about there in green. So this, therefore, is more selling. This is more distribution. Okay, I believe this is strong evidence because it's in the exact place where it needs to be. It is right here. This is the fish out of water. When I see lots of ultra high volume on this up bar underneath the roof, this is the best price they can get for the next down move. This is the best price that anyone can get for when they're shorting. If they're shorting in the USDT, or they're shorting the tether, or they're exiting the tether, this is where we're going to see the activity, which means it's very bullish for Bitcoin. So close to the chest on the daily chart, I can see there should be still more room to play. If all we had was just the spikes, we combine it now with what's happening this past week in the volume and in the data, we can see that prices should be going down on here and therefore up on Bitcoin. And I'm going to put this in my notes, okay, because this is what I've noticed this week. There is strong evidence this week that USDT.D is going to go down. Number one, price on the sickness side of the downtrend. Number two, price pulling back in the spike zone, but only stopping on the underside of the downtrend. That's being in the basement, okay? And number three, volume revealing more downside, okay? And I'll just, for that, okay, volume's revealing more downside, all right? So there it is. So guess what? Am I going to be trading cryptos, Mother May I, to Bitcoin? Absolutely. Absolutely. This is more evidence that we are going to be hitting that target zone of 3.14 to 2.18, which makes it very attractive for the markets. All right, let's take a look. Lisa says, does the USDT chart show anything significant around mid-April for the Bitcoin halving event? I don't have anything regarding that type of timing at the moment. Nothing in mid-April. Yeah, unless the Lord shows me something specifically about that, but I don't have anything. Do you see evidence of decoupling market versus a stock market? No, I haven't seen any correlations primarily between the stock market and the crypto market. However, I would expect, according to the intel and according to some of the prophetic stuff, I could easily see that if the stock market begins to crash, and there's certain areas there's certain prophetic events that we expect to happen, such as the preemptive missile strike by Israel. Israel attacks an enemy, which they're in the habit of the last year. They've been just launching attacks, and not last couple years actually. They're going to launch some preemptive attack. Some type of smoke is going to come out of the ground. They're going to shoot the ground, and then people are going to blame Israel. And it's approximately within 1 week or so from that happening is when the stock market's supposed to crash. A lot of people are going to flee the stock market. They're going to put their money in the crypto. Crypto's going to go even up higher because they had initial buying. And then what's going to happen is, as the panic begins to set in America, that's when a crash should happen in crypto. But it's supposed to be somewhere like a week after the stock market crash. Cryptos will follow, but it's not going to be the same day. So it's a big clue about when those things would happen. But until you see that happen, I really wouldn't be looking for the crash just yet. And even then, in the data, we can see that this is the season where we should be making our run. It could still be within a whole month, but just in the past few days, that's the data I see. Okay, we knew this one, we talked about it, and now we're talking about completing this run. And if we can do it all in one move, then you're going to see some very high prices. We want to maintain our positions. We want to be real careful. Even though I'll be giving a quick shorting tutorial, I want to be careful taking any shorts. I don't like to short in a rising market. I like to short only when I see heavy weaknesses. So if you guys are seeing these content on YouTube, I encourage you, come to our website, www.patreon.com/jsong_7 and join us. The link is in the description, and you get to be invited to these live meetings. All right, so that was all that we have today. Thank you guys for watching.